Here we have the current stock market update for NVIDIA Corporation, stock ticker NVDA. Before we begin with today's chart analysis, if you find these educational materials to be helpful in your trading, please remember to click the like and subscribe buttons and leave your thoughts below in the comments section so that other traders will be able to find this information more easily on the platform. So what we're looking at here is the daily price chart. I do think that this is probably still the best overall view of the stock as things currently stand. Some of the downside momentum that we have been seeing is starting to slow down a bit, but we're also starting to see a bit of a consolidation phase, and this is starting to look like a period of indecision rather than anything else. So in this video, we're going to be looking at some important price zones, some key support and resistance levels that can hopefully be used for traders to identify profitable trading strategies in the days and weeks ahead. So currently what we're looking at here is a share price movement that's holding right around 107.30. We haven't exactly reached the trading low yet for the day, but we will be sort of zooming in on this price chart here because what we can see on the daily candlestick formations here, remember, this is the daily price chart, so each candle here represents a full day's trading period. And what we're starting to see here is a bit of a doji pattern candlestick formation on the daily time frame. So what this does tell us is that there is a candle that has a very small body and much longer wicks on the top and on the bottom. What this really tells us is that there's not much of a difference between the open for the day, the opening price for the day, and the closing price for the day. So, in other words, the market hasn't really been able to develop a significant trend in either direction. We're sort of closing right around the same area where we open the market. So there's no significant trend, there's no significant price movement, and typically this is thought of as being a period of indecision. So it does look clear at this point that maybe the market is looking for some direction, not exactly sure what to do at this point. I do find this somewhat interesting that we're stalling at current levels for two different reasons. One, the prior price high from September 5th, September 5, came in right around 109.65. And this recent high here comes in at 109.40. So we've got about 25 cents difference here between these two prices. That's essentially the same area because this is not a short-term time frame. And then in addition to that, we have this sort of flatlining purple line here that can be seen on the price chart, which is the 100-day exponential moving average. This is important because this is one of the most commonly watched moving averages in the entire market. I mean, even people that don't really pay much attention to chart analysis will often have a 100 period EMA moving average somewhere on their price chart. And then you can find many situations where you even see the financial news talking about how, a certain mega cap stock might have broken above or below its 100-day EMA. So this is a technical signal here that is closely watched by the market. This isn't something that just technical chart analysts tend to view. And as things currently stand, we're trading below that level at the moment. So that does give us a little bit of a bearish outlook here. But overall, we're still caught within the entire exponential moving average cluster. So we're still caught within these four colorful lines here on the price chart. And ultimately, what that does tell us is that we're looking at a period of sideways consolidation. So overall, there's no significant trend movement that's being shown here at the moment. And so the real question here is, what are we consolidating for? Like, what is the next price move here? Are we going to see another major leg lower, or are we going to start to see investors step into the stock at these levels and start to buy the dip, so to speak? So, this is a major question here going forward because both scenarios are completely possible. If we look at the daily indicator reading and the relative strength index, what we can see is that the share price itself is still caught within a dominant wave of bearish momentum. There is a little bit of short-term momentum that is starting to develop to the top side. But when you've got two trend lines like this, you ultimately have to side with the longer term of the two. So here we can see that the downtrend line is much longer term in nature. So overall, this would be considered to be more powerful, more influential. And we would have to suggest that share prices are being, controlled or dominated more by this downtrend activity than we would be by this more recent uptrend activity. That doesn't mean that we can't develop an uptrend from here. It's already starting to show evidence that we could be in the development of a longer term uptrend here. But the way things currently stand, the majority of the price momentum is still focused on the downside. So, as things currently stand, what I would say here is that the market is really looking for some direction at the moment. I think that some people probably want to start to enter into the stock and buy in at these lower levels, but maybe people are waiting for some better evidence that we've actually seen a bottom, that we're not going to see another major trend wave movement to the downside. And these are all, very valid concerns to be having. If a company reports positive earnings and you see major, substantial sell-offs to the downside, it would make sense for people to be a bit reluctant or a bit concerned, not exactly overly excited to start stepping into the market at the moment. And I think that that's what we're looking at here on the price chart. So overall, the question here is what is going to give us the next trend direction? So to the downside, what I would be looking at here really does come in right around this 99.30 area. That would require a little bit of a break below these prior lows, as well as a break below that $100 psychological handle. The reason that I'm pointing to 99.30 specifically comes from the fact that it would be the 78.6% Fibonacci retracement of this ascending move higher. Essentially, what I'm talking about here is this move from $90.69 to just above 131.20. If we see share prices break below 99.30, that would give us a break below the 78.6% Fibonacci retracement. And then what you start to encounter is a greater likelihood that share prices would then retrace this entire trending movement lower. So in other words, that would put us right back at these 90.69 lows as a potential downside target. If we are able to sort of maintain support in this area, then you're more than likely starting to see share prices move back above the exponential moving average cluster. At the top here, that would require a move into roughly 115.60. If we see a bullish movement above 115.60, I think that we can start to generate some positive momentum to the top side. And then if we're looking at this relative strength index reading here, I think that this trend wave movement would start to become more influential and start to take some more control over the stock. So there are a few different factors to watch here. I think that the market is currently looking for a bit of direction, not quite finding it at the moment. So this is something that should resolve itself here relatively soon. So here's the current stock market update for NVIDIA Corporation, stock ticker NVDA. Our high value trading strategies membership is currently available for a limited time for only $9.99 per month. These high conviction investment strategies are characterized by superior risk to reward metrics that target massive market beating returns over time. Join now to outperform the market. Lock in this special introductory rate of just $9.99 per month for the entire lifetime of your membership and start trading stocks with the pros.